Hey, what's going on, everybody? Today we're going to talk about 10 things you need to know about an FHA loan. So the first thing you need to know about an FHA loan is that it can be used to either refinance or buy a property for the first time. A lot of common misconceptions are that FHA loans can only be used once, and also that FHA loans are only for first-time homebuyers. That's not the case. The second thing we should know about FHA loans is that it is used for 1 to 4 unit properties. So you can get either a single family or you can get a fourplex. Either way, you can qualify for an FHA loan, and you can put down as little as 3.5%. The only trade-off to putting down that 3.5% is the third thing that you need to know, and that is that it has to be your primary residence. So you have to have the intention of living there. You might have a situation in 6 months or a year where you can't live there anymore, and then you can turn it into a rental or something. But the main thing is, when you're originally moving in, it must be your primary residence. Also, if you are new to my channel, welcome to my channel, Escape the Matrix, where we help you escape the 9 to 5 life. And if you're interested in that, make sure you subscribe, watch the video all the way throughout, and make sure you hit that like button if it does help you. The fourth thing you have to know about an FHA loan is that your credit score can be as low as 510. But if you are under 580 and you are at that 510 score, most likely your lender is going to ask you for at least 10% down payment. So that is something that you have to keep in mind. If you do have lower credit, try to make sure, if possible, that your credit score is above 580, because once it's above 580, you can utilize that 3.5% down. But if it is below it, then you can't, and you might have to put down as much as 10%, and some lenders may even ask you for more. But just because you need at least 580, that doesn't mean that you'll get the best interest rate. The higher your credit, obviously, the better of an interest rate that you'll get. For optimal results, you do want a credit score over 740 to get the best rates, and anything below 700 will get you not so great rates. The FHA loan limit ranges are $420,000 to $970,000, and that would depend on the city that you live in. So the loan limits are different for different cities. Obviously, that 970,000 limit is for bigger cities like New York City, San Francisco, and probably some others that I can't think of right now. So make sure you do check the FHA loan limits for your city when you are applying for an FHA loan. That is something to know, just in case the property you are looking at may be too expensive to qualify for an FHA loan. The sixth thing you have to know is that an FHA loan requires an upfront mortgage insurance premium, and as of this recording, that premium is about 1.75%. So that's 1.75% of the total loan that's due at closing. And some lenders will let you roll this into your mortgage, but that's something to keep in mind. So whatever the amount for your house is, or actually whatever the amount is for your loan, you have to pay 1.75% of that upfront for the mortgage insurance premium. The seventh thing you have to know is that any down payment less than 20% requires you to pay PMI, which is private mortgage insurance. Any FHA loan that has a down payment less than 20% requires PMI. This loan is government backed. You have to pay this cost. So a quick way for you to calculate your PMI would be to take your total loan. Let's say in this example, your loan is $500,000. So you would take that $500,000 loan and divide it by 100, and then divide that by 12. In that example, your PMI, or your private mortgage insurance, would be about $416 a month. That is a quick way to calculate your PMI, and that'll give you a good idea off the top of your head how much your PMI will be. Now, as far as getting rid of PMI, there's a common misconception that you can get rid of PMI once you hit 20%. As of 2015, this is no longer the case. If you put down less than 10% down payment for your loan, your PMI remains on the loan for the life term of the loan. There is no way for you to cancel PMI unless you refinance your mortgage. But besides that, there's not a way for you to order an appraisal. There's not a way for you to show 20% equity and get that canceled. As of 2015, if you put down less than 10%, there is no cancellations, and that PMI is for the whole term of your loan. But of course, if you do put 20% down, then you have no PMI at all. But there's a middle ground. If you put down at least 10%, you can get your PMI canceled after year 11. So those are your only three options when you take an FHA loan. The eighth thing you should know about an FHA loan is that the down payment actually doesn't have to fully come from you. It can come in the form of a gift from someone else, as long as they can verify those funds and provide you a letter. They just have to verify that they gave you that money without any repayment expected. Alright everyone, if you're enjoying the video so far, make sure you smash that like button, just to let the YouTube algorithm know that you guys are enjoying the content. So the ninth thing that you have to know about an FHA loan is that the max debt to income is 50%, but most of the time, most lenders are going to try to make it 45%. So with that being said, they will stretch it out to 50% if that's the only way for you to get it done. But that is the max that FHA allows, so you can't go any more than that. So that means that if you are making $10,000 a month, the max your mortgage can be is $5,000 a month. That means if you're making $1,000 a month, the max your mortgage can be $500 a month. The 10th thing you have to know about an FHA loan is that it does have to pass the appraisal, meaning that if you are buying a house for $500,000, it has to appraise for at least $500,000. Because this is FHA, and that means that it's government insured, they want to make sure you're not buying a bad investment, meaning that if you're buying a $500,000 house, it should be worth at least $500,000. It shouldn't come back as an appraisal of $450,000. So FHA will make sure of that, and this is separate from all your other inspections and everything else that you get on your own. And FHA will also make sure that the house meets its guidelines, and that's not too many things, but that's just basic things like safety measures like handrails and things of that nature. This is more for safety than the actual condition of the house. And it also has to be livable because it is a primary residence. That has to be livable. I hope this video helped you and it gave you a little bit more clarity on the FHA loan. And if you guys do have any questions, make sure you comment it. Make sure you smash that like button just so we let YouTube know and they can show it to a lot more people that need the same help. Hit that notification bell so you can be alerted anytime I post a video. Until next time, enjoy your journey, escaping the Matrix.